So KPMG says Nigerian unemployment had increased to 7.7% in 2022 and will further rise to 40.6% due to the continuing inflow of job seekers into the market. The multinational consulting firm, in a newly released report tagged KPMG Global Economic Outlook Report H1 2023, said unemployment will continue to be a challenge due to the slower than required economic growth and the inability of the economy to absorb the 4 to 5 million new entrants into the Nigerian job market every year. Analyst with Financial Derivatives Company Limited, Oluwatomi Mayowa, joins me now to discuss this a little bit further. Good morning.
Good morning.
Thank God it's Friday. I'm sure you can use a Friday. You can use all the weekend. Good. But it's the unemployment figure each time that looks like that hit below the belt. Each time we look at the numbers from about 37.7, we would have 33.3 in 2020, moved on to 37. Now KPMG Nigeria say, look, this could reach 40.6.
Well, let me start by saying that, the MBS has, said it's going to update its methodology of, calculating doing the research about the unemployment. And, based on that, it's likely we might see a decline. We might not see as high as expected. That's basically because when you look at the new methodology, it says that those that are employed will be those that are actually working, irrespective, or those that are getting paid, irrespective of the hours they work, compared to the previous methodology that says about less than 20% about less than 20% of people that are not working around that 20% hour, less than 20% hour are those that are considered that are not what's unemployed. And so that's definitely, when you look at that difference, that definitely is going to bring down the number of the unemployment. And so, but irrespective of the methodology, methodology or no methodology, it's quite obvious that Nigeria's macroeconomic instability has deteriorated significantly, and definitely that's going to affect the general level of unemployment in the country. And we could see how foreign direct investment, which actually boosts employment level, actually declined by about 33% in 2022 from about to $699 million. So that's and the fact that forex restrictions have actually heightened. It's now more difficult to do business in Nigeria, compared to what it used to be before. And so all of these things, when we look at all of this factor, we would see that definitely unemployment is going to get worse. Also, looking at the bigger picture, which is about underemployment, because most people are not, getting well paid, and they are not even giving their best capacity because of the structure of everything. So, looking at high inflation, it's not easy. Whatever you're getting last year, the value of what you're getting this year, it's has actually declined significantly. So it's still, the problem is still there, irrespective of whether there's going to be a decline or considering the methodology or not. I
agree to that. Whatever methodology we use, exactly, the unemployment is still a problem. It's still an issue, because again, the level of economic growth. Look at the first quarter GDP. Yeah. Does that speak to the fact that unemployment is still there, and we've not really been able to grow the GDPs substantially out of that $500 billion kind of figure?
In fact, we all know the reason why we had the slow growth in Q1, which is about 2.31%, and that was because of the adverse effect of the Naira redesign, the unintended consequences of the Naira redesign program. And so we saw how that, because of those sectors that, the business transactions were predominant, or should I say are predominantly, settled in cash in this sector, like trade sector, the manufacturing sector. And what was, not really surprising, but we saw that agricultural sector actually contracted to about 0.9%. That's the first time in a decade. So knowing that, it was a big, blow to the, especially to those sectors. And you look at those sectors, they're actually the sectors that are job elastic. For example, the trade sector employs about roughly 14% of the total labor workforce. And you look at manufacturing, about 7%. Looking at agriculture is about 48%. And that was the sector that actually contracted because most farmers were not big because they will have to collect their money in cash. Looking at they were mostly in the rural areas. So they could not get cash and they could not go to the farm.
They had to pay farm hands in cash as well.
So that was what happened, and then we saw all of that. So definitely that would actually impact the level of employment. The cash crunch effect, would actually impact that. That's looking at these sectors that are slowed down now.
Interesting. When we put all of this together with what the AFDB is projecting in terms of Nigeria and other economic group projections of about 4.1% this year, 4.3% for 2024. Now, if you look at the whole vulnerabilities, both here at home and globally speaking, do you think this is a little bit realistic?
I understand that because, the World Bank is projecting about 3.4% for the East and Central Africa, and then about 3% for the Southern Africa. So it's a little bit high, considering the fact that even though it is true that 2022 has passed, where we had the Russia and Ukraine war, then the pandemic, the economies were still struggling from that, and now that those economies are actually struggling to recover from the adverse effects of those things that happen. So we are still seeing that issue even in this year, even though we've seen global commodity prices decline and inflation is now slowing. But given the fact that there's this debt crisis, there's public finance problem, it's hard for them to be able to finance major projects in Africa because of their debt problems. So it's the outlook is still cloudy. It's still sort of vague. So before we begin to see an improvement, will be probably next year, 2024, when these economies have recovered. Especially now that they've about $600 million has been doled out to Ghana. From IMF. So we could see an improvement. But that would be towards the ending of the year. 2024.
Ghana got that. Ivory Coast just getting some IMF support as well. World Bank is looking at $1 billion for Kenya. But again, when you look at all of these, a few of these countries are going through a very rough patch. But here at home in Nigeria, we're transiting for a major leadership. We have an incoming administration, and the whole talk is about turning the economy around, or whether you're consolidating what had already been done over the past 8 years. So what do you think needs to be done? Are there any ideas from FDC as to what needs to be done differently and very quickly?
Yeah, well, these are actually interesting times. It's all over the air that people are quite expectant. The market is quite expectant of what, because we've gotten to the peak of, we can't afford to do, the wrong things anymore. It's time to actually, start implementing policy, reforms, and institutional reforms. Those two must actually come in together because once there is a policy reform and there's not we are not saying that institutional reform, we are going to see that policy, deteriorate over time because there's no background for that to be kept for a long time. So Nigeria is currently at the need of, serious reforms in its policy and in its institution. I'm talking about the subsidy when they announced about, especially in terms of building the confidence of the foreign investor confidence, which will actually bring in foreign direct investment and can even boost on employment levels generally. So if all of this come into place, we'll see foreign investors' confidence come back, and then we'll look at the example of the subsidy that was actually removed, and we saw that not removed. The announcements or the fact that they were going to move, they actually postponed that, and so we saw that Eurobond prices actually fell because of that, because investors were like, oh, these guys are not ready to do anything and all of that. So when we see that reform, we'll see that foreign investor confidence, come back into place, and then that will be a boost for the economy. So it's high time we actually, do all of these things, and we're going to see that rebound in the economy.
Interesting. Inauguration is just a few days around the corner. Then we have what you call a new ocean. Let's see what it looks like, whether it's blue or red. Well, let's say thank you so much, Oluwatomi, Mayowa. Thank you so much. It's great to have you. Enjoy the rest of the day and your weekend as well.
You too.
It's good to have you from Financial Derivatives Company.